So I came up with a few hacks. I thought there might be like 2 or 3 things at least I can think about that can be useful. And the first hack was that just being aware of these facts is a huge advantage. So being aware of the fact that we have a lot of biases, our mind can play kind of games, tricks on us, the shut-off mechanism in the human brain and so on. So being aware of that, being rational. Charlie Munger says that he hasn't been successful because he's smart. He's been successful because he's rational. And another thing that is, I think, a very useful approach is to be fluent in the other side of the argument. So if you're going to go long a stock, it probably is a very good exercise to spend time developing a thesis on why to go short. And that'll force your brain to think about things that normally it doesn't want to think about and such. So the first hack is just kind of be aware and let rationality prevail. The second hack is kind of like what Buffett. I just want to go back to Warren Buffett's childhood when he was a teenager. Before I get to the second hack, so Warren Buffett, when he was a teenager, used to go to this racetrack in Omaha called Ak-Sar-Ben. It's actually Nebraska spelled backwards. So this Ak-Sar-Ben racetrack, what he used to do is after all the races had been run, he'd go and collect all the discarded tickets people had left on, throughout the racetrack. He'd collect them all, and then he'd go through each ticket carefully to see if they were discarded tickets that were actually winning tickets. Because people are having fun, they're drinking and so on, and so sometimes they might have a winning ticket, not realize it. And he would always find a few of these free lunches, if you will, tickets that are actually winners but had been discarded. And because he was underage, he used his Aunt Alice to go to the window and collect on these tickets. And so this is what kind of the teenage Buffett did. And then in 1993, there was this author who went by the name Adam Smith, and he wrote a few books, Money Masters and so on, Super Money. And he was interviewing Warren Buffett, and he said, so Adam Smith says that if a younger Warren Buffett were coming into the investment field today, what would you tell him to do? So Buffett says, well, I would ask him to do exactly what I did, which is, if you're working with small sums, learn about every publicly traded company in the US. And then Adam Smith said, but there's 27,000 companies. And Warren Buffett's answer was, start with the A's. And so it sounded like a kind of facetious reply, but really wasn't. And at the 2001 Berkshire shareholders meeting, Buffett said that when he started in 51, he went through every page of the Moody's manual twice. And it's, set of the Moody's manuals were 20,000 pages. In fact, I bought one recently on eBay, and it's got about 3 or 4 companies per page, and it goes about 1,500 pages. So there's a lot of data there. And he went through that 1 year 2 times. And then in 2006, he was talking to students at Columbia University, and he was talking to them about going through the Moody's manual in 51. I'll just read that, it was an absolute question of turning the pages. On page 1433, he found Western Insurance. 1949, they earned $22 a share. 1950, $29 a share. And in 1551, the range on the stock price was between $3 and $13, kind of less than half of previous year's earnings. And he went to a broker and looked at the AM Best manual, so there was nothing wrong with the company. And then, 10 pages later, he found National American Fire Insurance. And then he says, this book really got sensational towards the end. In 1950, it earned $29. The share price was $27. The book value was $135. And then in 2005, he told the students, just a year before he met them, someone sent him a Korean stock market guide. I actually seen it. It was put out by Citibank. And he spent about 5 or 6 hours on a Saturday going through this list of Korean companies with just some of the basic information. And he picked out about 20 companies from that list, and he put about 100 million of his personal portfolio into those 20 companies. And so, for example, there was Daehan Flour, which sold about 1/4 of the flour in South Korea. It had earnings of 13,000 won 3 years ago, 18,000 won 2 years ago, 23,000 a year ago, and it had over 100,000 won in per share in equities. And the whole thing was going for 38,000 won, right? So he did very well with his Korean escapades without really knowing a whole lot about the businesses. He just kind of went through them just purely on a quantitative basis. And then, in 2011, my friend Guy Spear and I found ourselves in Warren Buffett's office, and you can see on the right, there's the Japan company handbook. And I was actually familiar with that handbook because I had a subscription to the exact same book. And so when I saw that on Warren's desk, it was quite a surprise. And so I asked him about it because, in 2011, Berkshire Hathaway, they can't, buy Mickey Mouse companies, And the reason I was going through the Japan company handbook was I was looking at Japanese net nets, companies trading well below their liquidation values and so on. And so I asked Warren, why he was fooling around with the Japan company handbook. And of course, he puts on a poker face and doesn't say anything. And then I picked up the book, and Guy and I dog-eared some of the pages of companies that we had found that were interesting. So without asking him, we kind of mutilated his copy. And most of these companies were towards the back of the book. He says, yeah, it's always the case. It's really the back end is when all the good stuff shows up. And then, of course, he doesn't tell us anything more about what he did with that. But that was during daytime hours at Berkshire Hathaway is what he's doing. So actually, the teenager at Aksarban and the young adult going through the Moody's manual, and then the much older adult going through the Korean stock book and then the Japan company handbook, all of these exercises are the same. They are all exercises where you're spending very little time on either a given ticket or a given company, and you're going very rapidly through. I mean, if you're cycling through 40,000 pages with 50 or 80,000 companies in a year, you're clearly not spending much time on any single company. And so what he was looking for when he was going through this was very specific patterns. And when he saw those patterns, he acted. And so the pattern was it had to hit him over the head with a 2x4. And so either it had to be a winning ticket at Aksarban, or it had to be a stock where it would just stop you in your tracks. 100,000 in book values, trading for 40,000, making 25,000 a year, that sort of thing. And so that brings me to the second hack, which is basically, to paraphrase Nancy Reagan, just say no quickly. So we have this built-in bias where once we spend time, we get pregnant with the idea. Well, don't spend a lot of time, right? And so you are rushing through a lot of stuff and only spending time on stuff that is looking like an absolute no-brainer. And one of the things about the investing business, which is so much better than baseball, is there are no called strikes. So we can let hundreds and thousands of ideas go by, and it doesn't matter. So it doesn't matter if we miss something that goes up 10x or 100x or 1,000x. What matters is what we actually invest in. So it's a very forgiving business from the perspective that we don't really need to know everything about everything. We don't need to act on everything. We can miss lots and lots of stuff, and it can still work out well. And the advantage, so just say no fast, is what it does is it frees up a lot of time. So if you're going through companies, and many times when I look at a business, most businesses I look at, I'm done in seconds. Maybe it takes 10, 15, 20 seconds, because I'm generally looking, like for example, on a typical day in the office, people will send me investment ideas, which is great. I love to receive investment ideas. So, it's mp@pabraifunds.com. Feel free. And so when I get in and I look at these ideas, I just look for two numbers. I look at what is the stock price of whatever idea is being pitched, and what is the person saying it's worth. And unfortunately, most of the things I receive will be like, the stock's at 12, and here's all the reasons it's worth 16. And so when I see something like that, in about 10 seconds, I'm done. I don't even bother to figure out whether it could be worth more and the person missed it and so on. I just assume there's some intelligent person who thought about it, and I'll just give him full benefit of doubt that they've got it right. And so the same thing with most companies. When I look at them, if it doesn't hit me very strongly with some intensity in the first few seconds or first few minutes, I move on. And if it does have unusual traits, I mean, I think in 2012 I spent a lot of time, probably 2 months, doing nothing but studying Fiat Chrysler and General Motors. And so it frees up a lot of time to study the businesses, but you've scanned a lot of stuff on the horizon before letting things in. So that's the second hack, is just say no fast, and that kind of leaves room. And of course, if you are a voracious reader and you kind of buy into what Charlie Munger says is the lattice work of mental models, then many times things will come together in a very rapid time frame. I mean, Warren Buffett talks about that he got a cold call from a banker who suggested to him that Dairy Queen, which was privately held, was a company that was available for sale. And so Warren said, well, we have our acquisition criteria listed in the annual report. Does it meet all the conditions? And the guy said, yes. He said, well, send me the numbers. And about, I think in less than half an hour, Berkshire had made an offer and they had a deal. And so there was no way Warren Buffett could have looked at Dairy Queen before, because it's not a public stock. But he knew enough of the business to understand that basically, franchised restaurants, there's a certain way you can look at them. And you can figure out kind of what they're worth and what you ought to be paying for them, and so on and so forth. And he went through that math really quickly. Now, he had an investment at that time in McDonald's, which he probably studied at some length. And that probably got him where he needed to be. So the third hack, which is kind of related to the second hack, is basically this notion that Eli Broad talks about, the art of being unreasonable. That's the title of his book. It's a great book, actually. And so Broad is a very successful entrepreneur. And so in the quest for investments, be unreasonable. So don't settle for, this thing is at 13 and it should be 18 and that sort of thing. I always tell people, please try to send me things which are PE of 1, because PE of 1 is great. Maybe PE of 2. And I can deal with that. Single-digit math is easier to deal with, and such. And so basically, there are over 100,000 publicly traded stocks on the planet. There are always things going on with different companies, getting into distress or high growth or various other things. And because these are all auction-driven markets, by definition, they have wide swings. I mean, you can throw a dart at a New York Stock Exchange company, look at the 52-week range on the company, and it will be something like $75 to $150. And if you pick a random home in Palo Alto, that is not the fluctuation in the stock price, in the home price. And so auction-driven markets have this nuance where they kind of, either get euphoric or they get pessimistic. And they might do both in the same year. And so that's what leads to the distortions and mispricing, and that's what we can take advantage of. So those are some of the thoughts I really wanted to share with you. Again, this is kind of work in progress. I still trying to get better at it, and I just want to make sure that I am aware of the fact that spending time on companies is likely to make me biased, and so I'm hoping to get better on that. So with that, thank you, Saurabh.